Is GlobalFoundries a buy or a sell? Let's get started with the model. This is a large cap company, 24 billion market cap. They're trading at $43 a share, and they have 551 million shares outstanding. GlobalFoundries is a manufacturer of semiconductor chips. They have a strategic partnership with the company Efficient Computer to develop high-performance computer processors. GFS was incorporated in 2008, headquartered in Malta, New York. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They had $1 billion of free cash flow in 2021, then negative in 2022. They did have positive net income, so they invested a lot into CapEx that year. Back to positive in 2023, up nearly 300% in the trailing 12 months to $1.2 billion. Pretty good margins. They converted 18% of their revenue into free cash flow. Net income is the profit or loss on the income statement. It's revenue minus expenses. That was negative in 2021. They had their best year in 2022, $1.4 billion. Then it's been going down since then, $700 million in the trailing 12 months. Revenue is a sales for the company. That peaked in 2022, $8.1 billion. For some reason, it's going down. There is so much demand for semiconductor chips, I would think their revenue would be going up. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's $120 billion. We discounted those numbers back to today using weighted average cost of capital. We get a value of the company of $95 billion. We divide that by 551 million shares. And we get a calculated stock price of 172. They're trading at 43, so they're trading at a 75% discount. It's a really strong buy according to the model. I think this company is going to really benefit from Trump being in the White House because he wants semiconductor manufacturing to be in the U.S., not importing from Taiwan, which is what the big guys do. NVIDIA imports most of their chips from Taiwan Semiconductor. The purpose of the CHIPS Act was to help companies like this grow in the U.S. So this company received a lot of funding from the CHIPS Act, so did Intel, so did Taiwan Semiconductor. Taiwan Semiconductor is building a factory in Arizona because of all the money they received from the US government. They received $11 billion. There are 64 companies in the same industry as GFS, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spent $760 million in CapEx. They're still a pretty small company, but I expect this number to grow a lot in the near future. A good debt-to-equity ratio for every dollar of equity, 20 cents of debt. They don't pay a dividend. They may pay one in the future. They generate $1.2 billion of free cash flow, almost as much as AMD and almost as much as Texas Instruments. Double ARM, a lot more than MU. They rank 16th in market cap, but I think their market cap should be in $100 billion range. Price to book is 2. That means investors are paying $2 for $1 book value. PE is 32. A little worse than the median. Look at that price to free cash flow, 19, one of the better ones on this list. Trading at 3.5 times earnings. They generate $7 billion of revenue. That's double ARM. But they're not growing anymore. I don't know why. Their 5-year annual revenue growth rate is 0%. And the stock is trading at $43, pretty close to its 52-week low. So jump in. It's going to be a lot of upside in 2025. If you put $10,000 into this company when they started trading, you would not be happy. At $8,800 today, a 12% loss. So to summarize, I have them trading at a 75% discount, ranking 8 out of 10. I think they're ripe for the picking. Would I buy it short-term and long-term? 10 out of 10. I'm jumping in this stock tomorrow. Ratio is 8 out of 10. A great price to free cash flow. PE is decent, a little inflated. Financials don't look so great, 4 out of 10. They're not growing nearly as much as other companies, but I think that's going to change a lot in 2025. Let's look at their third quarter earnings. Revenue $1.7 billion, margins 24%, operating margin 11%, gross margin is 24%. Net income $178 million, over $600 million of EBITDA, $4.3 billion of cash. Operating cash $1.26 billion, up from $779 million. They're nurturing their relationship with NXP Semiconductors. NXP is a Dutch company. Pretty good size, 58 billion market cap. They pay a dividend of 1.79%. They're also in the semiconductor industry. They've been leveraging GlobalFoundries 22 FDX chips. And those chips are manufactured in Germany and New York. Over 1,000 people went to their annual technology summit. That was in Santa Clara, California, Munich, Germany, and Shanghai. That's a good way to build more relationships. They entered into a partnership with FinWave Semiconductor. Finwave is a private company. They don't trade publicly, so you cannot buy the stock. Their revenue is up from last quarter. Last quarter, $1.6 billion. This quarter, $1.7 billion. But last year, $1.85 billion. So it's down 6% from last year, up 7% from last quarter. Gross profit, $414 million, 24% margin. Operating profit, $185 million, 11% margin. Net income, $178 million, 10% margin. And their EPS, 32 cents. Last year, 45 cents. Operating cash flow, $375 million, down from $416 million. And they shipped 549,000 wafers, down from last year, 575,000. Here's their guidance for next quarter, 1.8 to 1.85 billion of revenue. Gross profit, about $450 million. Operating profit, about $200 million. Net profit, also around $200 million. So that's a conservative growth. If they beat these numbers, the stock will go up a lot. Here's their income statement for the third quarter. Revenue, $1.7 billion. Cost of revenue, $1.3 billion. So gross profit is revenue minus cost of revenue, $400 million. They spend a good amount on R&D, $130 million. SG&A is $100 million. These are all the expenses not directly tied to making the products. So operating expenses, $229 million. Operating profit, $185 million. That's down from $261 million. And their EPS is 32 cents, down from 45 cents. Shares outstanding went down a little bit, 553 million last year, now it's 552 million. Let's take a look at the balance sheet. Current assets, $6.6 billion. Current liabilities, $2.7 billion. So a pretty high current ratio, well above 2. $3.5 billion of cash and marketable securities. Accounts receivable is $1.3 billion. This is how much money is owed to them when they sell on credit. Inventory, $1.8 billion. Since they're a foundry, they do manufacturing, so their biggest asset is PP&E, nearly $9 billion. So total assets, $18 billion, same as last year. Liabilities, $6.5 billion, a little less than last year. Their biggest liability is the non-current portion of long-term debt, $1.8 billion. The current portion of long-term debt is $500 million. Assets minus liabilities equals equity, $18 billion of equity. They raised $24 billion from selling their business, and they lost $12 billion from running their business. Let's look at a statement of cash flows. Operating cash flow, $375 million. That's how much cash the company generated from running their day-to-day business. The way you calculate that, you start with your net income, then you add back depreciation and amortization, that's $400 million, and then you have to adjust for changes in working capital. They had a cash outflow of $260 million in working capital. In the investing section, they spent $160 million on PP&E, half of last year, $69 million on acquisitions. In their financing section, they paid down $10 million of debt. It doesn't look like they added any debt. Here's how they convert revenue to EBITDA. Revenue, $1.7 billion. They had net income of $178 million, so you add that. This company is going to benefit a lot with Trump being in the White House. Here's a recent article. U.S. finalizes $1.5 billion CHIPS award to GlobalFoundries. The U.S. provided a grant to GlobalFoundries to support their semiconductor manufacturing, as Biden works to secure parts of his legacy before Trump returns to the White House. So everybody wants to give this company money, not just Trump, but Biden as well. The great thing about a grant is you don't have to pay it back. It's like free money. When you get a loan from the government, you have to pay it back. This $1.5 billion is under the CHIPS and Science Act. Those are incentives to boost research and U.S. semiconductor production. Or production of bagels. I guess they make bagels. The U.S. produces about 10% of the global supply of chips. We rely on East Asia for 75% of the production, mostly Taiwan Semiconductor. By investing in GlobalFoundries, we are helping to secure a stable domestic supply of chips that are found in everything from home electronics to advanced weapon systems. This means that funds can begin flowing when milestones are reached. So they need to hit certain milestones to receive all the money. The Biden administration has unveiled billions in grants through the CHIPS Act, but much of the funds have not been dispersed. I wonder why. President-elect Trump has criticized the CHIPS Act. He thinks we should do tariffs. He's a big proponent of tariffs. And this award is aimed at supporting a broader investment of $13 billion to GF over the next 10 years. So their manufacturing sites in New York and Vermont can start growing. There are just 4 companies outside of China that provide current and mature foundry capabilities at the scale of GF. And GF is the only one of these firms in the US. What about Intel? The aim is to boost economic and national security by increasing domestic manufacturing capacity and bringing back technologies key to US defense and intelligence. This investment in GF should add 1,000 manufacturing jobs. Last week, they gave Taiwan Semi $6.6 billion in direct funding. Just give all that money to GF or Intel. Let's look at Simply Wall Street. Its last price 43, 24 billion market cap, up 4% in the past week, down 24% in the past year. The stock started trading at the end of 2021 at around $40. 4 months after IPO, it peaked at 74. It never got that high again. Then it's just been up and down, up and down. But since mid-2024, it looks like it really struggled. From 56, it hit its all-time low last month at 36. Simply Wall Street's valuation is 41. They say the stock is overvalued. 18 analysts priced this stock at 49. They say it's undervalued. Their revenue back in 2018 was $6 billion. Its peak was $8 billion in 2022. It's down to $6.8 billion. Debt in 2019, $2.7 billion. Its highest was $2.8 billion. It's currently $2.3 billion. But equity is much higher than their debt, so they have a pretty strong balance sheet. They have $3.5 billion of cash, more cash than debt, so it's like they're debt-free. 82% of the company is owned by sovereign wealth funds, 18% by institutions. Mubadala is the biggest shareholder at 82%. That's an Abu Dhabi fund. 9% of the company is owned by Fidelity. Then you have BlackRock, Goldman Sachs, Morgan Stanley, JP Morgan, Dimensional Fund, Twin Beach Capital. Their employee count was 15,000 in 2020. Now it's down to 12,000. And the ticket trades on the NASDAQ, Börse Stuttgart, Deutsche Börse, Mexican Bolsa. So if you want to learn how to build a DCF model, and I show you all the inputs, how to calculate the free cash flow, how to calculate the WACC, and I may even send you a free version as well, click on the video in the top right corner. Thanks for watching.